Today I have a masterclass on trading trend lines for you. In the beginning we talk about the foundation, what are trend lines, what do they tell us. Then we move on to how to draw trend lines in the correct way. Third, we're going to talk about trading trend lines, what different signals can we observe around trend lines. And then I have 4 step-by-step trade studies where we can use trend lines in action and see how we can actually time trades. You can also use the video timestamps to jump to specific chapters if you want to watch only certain types or if you want to rewatch specific sections. So let's talk about the foundation first to lay the groundwork. So trend lines, as the name suggests, they describe trends. So ideally you want to use trend lines in an uptrend or in a downtrend. And trend lines, they help us to describe a trend. It provides well-defined boundaries for how the trend is moving up and down. And ideally, you want to see that a trend line has at least 2 touch points. Once you have 2 touch points on a trend line, it becomes valid. And then you can try to trade the 3rd, 4th, 5th touch point. How do we trade trend lines? I will cover in a moment. Of course, trend lines also work in a downtrend. It's exactly the same. We look for boundaries that help us describe the trend. And we're looking for those trendline boundaries that help us describe a trend. It is totally okay if you occasionally see that the price is trading outside of the trend line, as long as the price is coming back inside of the trend line. What you don't want to see is that the price is able to trade outside of the trend line for a prolonged period, or you don't want to see very strong breakouts. But if the market trades outside of the trend line and immediately falls back inside of the channel, that's totally fine here as well. The market dips outside of the trendline channel and then shoots back inside. So that's still a valid trend line that we can use going forward. So how do we actually draw trend lines? And I have a few examples for you. The easiest way when you're looking at a trend, and that's very important, you want to see that a trend is established. You can pick out the swing highs and the swing lows. Swing highs and swing lows are turning points in trends. So when we have an uptrend wave, we are starting with a swing low and the uptrend wave ends at a swing high. The price moves lower, creates another swing low. Of course, you can also pick out many more swing points here, but I just want to draw your attention to the most obvious ones. And that's a very good tip in the beginning. Stick to the most obvious swing points and the most obvious turning points. And then we are using our Trendline diagonal tool to try to connect swing points. And not always will you be able to connect swing points. And if you cannot connect swing points in a good way, then don't use the trend line. Only stick with markets where you actually find good valid trend lines where you can easily connect swing highs and swing lows. That's a very important tip. In a trend, you will also see that not all swing points can be connected. So that's totally fine. Don't try to force a trend line. Try to find trend lines at the most outer edges of a trending move. Those are generally the most helpful trend lines. However, there are many traders who also draw trendline midlines. So here we have a trendline channel that is moving higher. We have a very well-defined trendline on the lower end, trendline on the resistance side. And then roughly in the center, we also see that we have a mid-trend line. And you can very nicely see that the midline is also often acting as support or resistance. And that can be very helpful, especially on a higher time frame context. So assuming we find this on a daily or on a 4-hour chart, and we are able to pinpoint and pick out a very good mid-trend line, we can use that on our lower time frame as another support and resistance confluence level. We can also use it to time exits, or when we are in a trade and we can observe the price is moving into the midline, we have to observe how the price is reacting to this midline. There are 3 distinct trendline signals and ways to trade trend lines. The general approach is that once we have a trend line, we try to buy at the low and sell at the high. However, you have to keep in mind that if you find a trend line that is moving higher, or here in this case a trend line channel, you are in an uptrend and you typically only want to buy at the lower end. Selling at the higher trend line is a counter trend trade because you're going against the long-term trend direction. Some traders may be able to make this work going against the trend, but especially in the beginning, I would recommend to stay and stick with trend following trades. So only buy into an uptrend and only sell into a downtrend. Trendline breakouts are really common and I love to trade them because they help you find new trends very early on. You're not typically a reversal trader because you're not trying to sell at the high, but when a trend line is breaking, you typically already have seen a very good move against the trend line direction. So here we have an upward sloping trend line, the market is moving higher, and then here we see that the trend line is being broken. And it's not only about the breakout itself, but it's about how the trend is breaking the trend line, or how the price is breaking the trend line. Here we can see we have strong force, and even before the strong trend line breakout, we had a very long period of very strong selling candles here. When we look left, that's very different from what has happened in the past, and so it's a very meaningful signal. We also then have a retest, and that is really common. So you have the trend line breakout. On the breakout, we are creating another swing low. The market is retesting it once, retesting it twice, and then selling off into a new trend direction. And the third signal that we can find on a trend line are fakeouts. I already said that when a price is not respecting the trend line 100% and sometimes occasionally trades outside of the trend line, you want to look for situations where the price is immediately or at least quickly coming back into the trend line. So here we can see the market is moving outside of the trend line and moving back very quickly, starting a new downtrend. Here as well, the market is moving outside. We have a double top here at the fakeout area, and then a new downtrend is started away from it. So don't discard the trend lines where the price is violating the trend line, but instead observe how the market is reacting after it is trading outside of the trend line and whether the price is able to come back inside of the trend line quickly and with strong force. I also just released a new free ebook which you can download right away. You can go to the link in the video description or in the comments, and then you can download the ebook which contains 22 new trading strategies. There are dozens and dozens of screenshots waiting for you, detailed explanations for the best trading strategies that you can apply to all the markets and all the time frames. So now let's talk about how we use trend lines to find trades step by step. Here's the first example. So we have a trend line, the market is moving higher, and we can see on the lower end we are able to connect 3 swing points to create a valid trend line. The idea is that we wait now for the price to come back to the trend line next time, and then we look for a signal. We are not automatically trying to buy when the price is getting to the trend line, but we want to see and evaluate the reaction. Shortly after the market is coming into the trend line, we have a short-term breakout, totally fine, that's nothing to worry about. And the market is immediately snapping back inside of the trendline channel. I would not advise to trade right away. We need a little bit more confirmation, and I'm looking for more confluence. Shortly after, you can see the market is now back at a swing high point here, and we are able to connect the swing highs and lows to create a very good support and resistance level here. And this is what we can then use for our entries. We get a very good breakout signal with a strong momentum candle, and that could be our entry. For targets, you have a few options. We could look for our first major swing high inside of the trendline channel, or we could also target the opposite side of the trend line. The further away your targets, the less likely it is that the price will hit it. You could also think about scaling out of your position, so when the market is hitting this, close 50, 60, 70, 80%, and then just let a little bit run further to see if you can catch a large winning trade. You can see this is how it turned out. The price was able to hit the first target quite easily. The price didn't make it to the target until much later. So you can see the dynamic between holding time and targets very great here. The further away your target, the longer you have to hold your trade, the more ups and downs there will be, the more risk factors, the longer you hold your trade open. So in the beginning, I would not recommend to shoot for very wide targets, but keep it relatively safe. Go for smaller targets, and then typically you will be able to realize much better winning trades. Let's look at trade number 2. Here we have an uptrend. We're looking for the swing points. We try to connect the swing points, and we get a very good trend line where we are able to connect major swing points. Here we now have a trend line breakout. The breakout sequence is very important. You can see we have a strong bearish sequence here. The market immediately pops off away from the trend line, but it doesn't even make it into the half and midway point of this trendline channel, and then shows us another very strong selling sequence, breaking into new lows and completely exiting the trendline. Shortly after, we have a retest of this trendline channel, and this is what we call a stop run. Traders who trade the trendline breakout either directly on the trendline or here after the swing point is broken, they will probably get into a short position somewhere around here, and their stops will be generally somewhere in this area. And this is why we call it a stop run. The price is moving into the stop zone, and then this violent breakout, this huge red candle, is the confirmation that stops have been freed and liquidity has been triggered and the market is returning into the anticipated trend direction. So at that point, that's where you want to jump onto a short trade. And you can see the market continue to move lower very, very nicely, offering a good trading opportunity. Here's the trade number 3. Again, we're in an uptrend. We look for the swing points here that stand out. We try to connect the swing points. We get 2 different trend lines, a major trend line that is much longer, and then a shorter term trend line that is not as steep. And now we see that the trend line is being broken. We also have here a triple top, and from here to here we have a divergence. So the market is considerably slowing down here and is showing us a lot of weakness. The market is not able to push higher. At that point, you can also see we have a trend line gap breakout. So at the time here, the market closed here, then it opened here, creating this gap breakout, which is a very, very strong signal. You can see here, that's the weakness in the highs. This is the previous slope of the upwards trend line here. And then as we move into the later part of this trend line, it is flattening out. Those are very important signals. Then afterwards, the market is really collapsing, another huge breakaway gap, and the market is on its way on a new downtrend. So observing not only the breakout, but how the price is trading before the breakout is really, really important to get a whole picture of the price action, the momentum, and the trend analysis. And here another study. Again, in an uptrend, we are looking for swing lows. Then we connect them. We have a valid trend line with 1, 2, 3 touch points. We wait a little bit longer. The market is not coming back into the lower trend line, but it's creating another higher trend line. So here we can see resistance turns into support. We have another important trend line that we can use here going forward. We are still in an uptrend. The price traded into the trend line once again, offering a good long opportunity back into the highs that we have seen here. The price would have kept going a little bit further after hitting this high here on this trendline touch point. And then we are starting to see a lot of weakness. The first strong selling candle, a little bit of a recovery, but the market immediately shows more weakness. And this is very different from what we have seen here in the past. This is a lot of weakness coming into the market, a lot of bearishness coming into the market. The market is about to hit the lower trend line. The market is hitting the trend line here. There's no bounce yet, so we have to wait a little bit. And there was no bounce. The market just kept moving lower and lower. You can see there's a lot of weakness now coming into the market. We have a retest of the trend line after the trend line breakout. And I would recommend to draw your support and resistance levels on a breakout. We've seen it in a previous example in this video. You look for a swing point and then you try to connect the high and the low. Here we can very nicely see the support turns into resistance. And that's a very good place to look for a short opportunity. And you can see after the market started the first initial trend wave, here to the downside, we broke the trend line, we had the retest and the market collapsed lower. And that is a very good signal that you can find over and over again on all markets and all time frames.